To George Boubouras, Managing Director, Research, Investments and Advisory at K2 Asset Management. George, Mandy and I know you are in Tokyo right now visiting some clients. You've got a 2024 outlook on the Japanese market and it's not too underweight. Does that mean you're overweight? Please clarify.
Yeah, so overweight Nikkei first half of last year. Second half of last year went neutral. And we suspect we'll stay neutral on that profit outlook for the Nikkei going forward, even though it has been very flat the past 7 months. And the rally in the first half of 2023 was a lot of catch-up for previous years, and obviously the relativity and the composition of the Nikkei and the profit cycle. So while you be cautious in some equities and being very overweight given the stage of the cycle until you get confirmation of rate cuts around the world, we would say that the Japanese economy and the Japanese equity market, you wouldn't want to be going underweight and looking at high single-digit returns for calendar 2024 for the Japanese equity market.
How much is the yen weakness contributing to the overall market sentiment? Because I'm looking at dollar yen at over 140. You're actually expecting yen levels to hit 150 pretty soon.
Yeah, so a lot of preconditions to that target. So weakness in the yen again to resume in the very short term, partly predicated on the BOJ not adjusting policy. So the real rate, the nominal rate, I should say, will remain negative. And while there's consensus that they'll move towards zero in April, we believe that the expectation to do it earlier would put pressure. That delay in that rate adjustment will put pressure in the March quarter and that weakness in yen. But over the course of calendar 2024, we do look at that initially 150 weakness, then that 140 again towards the end of the year, possibly 137, 138, around that range by year end as a adjust policy. And you get a sense that the BOJ, it's very unique. They want to adjust policy cautiously with haste. I know that's a play on words, but Ueda is an interesting governor and with an interesting background. And we get a sense that through the local media that they'd like to see the end to this nominal negative rate policy stance. But they also know the risks of adjusting it too quick. And we believe that would probably happen after April, where the consensus is for an adjustment in April. So we think they want to change it. They want to look at pathways to change it. Unfortunately, the inflation pulse here is above 2%, but it's not really staying high. It is getting back down again. And but nevertheless, we think that going towards a zero rate towards mid-year is appropriate, and that's and that drives that yen weakness initially in the first quarter, and then yen acceleration or yen appreciation into year end. That's the thematic.